Hello everybody! Before we begin, let me introduce myself briefly. My name is Wanti. I'm a student at University with Accountancy Department. I'd like to talk to you today about the accounting cycle. Before I go any further explaining about the accounting cycle, I will tell what the definition of the accounting cycle is. Definition of the accounting cycle. The accounting cycle of providing helpful information for decision making. To make decision or information that accountants need to pursue a series of activities, data collection and processing. The accounting data collection and processing can be done systematically during one accounting period, and usually one accounting period will be 1 year. In that accounting period known as accounting process or accounting cycle. Accounting cycle. What is that the accounting cycle? The accounting cycle is a gradual process in which to identify, analyzing, and record coverage accounting events. One of accounting cycles starts from transaction journals, general journals, general ledgers, trial balance, adjusting journal, ledgers, adjusting trial balance, income statement, statement of financial position, and closing entries. Journal transaction. What is journal transaction? So every trading activity that is carried out must be recorded. Recording of the transaction which will serve as journal of the transaction. Examples of some journal transaction are cash note, cash credit, debit notes, check, receipt, and invoices. Let me give you an example to explain. If you buy an item at the nearest convenience store, you will get a receipt from the cashier. So, can you identify, clarify, and record if there is no proof of the transaction? Of course not. Proof of transaction is very important for accounting to record income and expenses. 2. General journal. General journal is a journal that is used to record all types of financial transaction, evidence that arises from all financial transaction of a company in a certain period for ease of financial management. For internal and external parties of the organization, to be able to make a general accounting journal properly, the following steps are needed to be implemented. 1. Understand the accounting equation. 2. Collect and identify proof of transaction such as notes, invoices, or receipts. 3. Recording of general journals uses a double entry system where every recorded transaction will have an impact onto financial position, debit and credit in balance. And 3. General ledger. General ledger is the main book of recording financial transaction that combines the entries from all accounting journals and is a similar classification of accounts. General ledger is the basis for making balance reports and profit or loss statement. 4. Trial balance. Trial balance is a list of all accounts in the financials or accounting statements that contains balance contains in the ledger. Adjusting journal. An adjusting journal is a journal that is usually made at the end of an accounting period to allocate income and expenses for an accounting period for changes in balance in the account, so that later it will reflect the actual balance value. Income statement. Income statement is part of the financial statement of a company produced in an accounting period that describes the elements of the company's income and expenses so as to produce a net profit or loss. Statement of financial position. Statement of financial position is presenting information about assets, liabilities, and shareholders' equity. The statement of financial position is the basis for calculating the rate of return and evaluating the company's capital structure. Closing entries. A closing journal is a journal that is created at the end of the accounting period to close temporarily nominal accounts. As a result of this closure, the balance of these accounts will be zero at the beginning of the accounting period. The closed accounts are nominal accounts and capital auxiliary accounts. From this point on, it is assumed that the accounting cycle is a set of rules to ensure the accuracy and correspondency of financial statements. Thank you for watching. Don't forget like and subscribe.